On the heels of the most anticipated news release for Atlas Salt to date, we speak with CEO Patrick Laracy on the significance of this independent preliminary economic assessment and the now updated mineral resource estimate by SLR Consulting. Patrick, welcome back.
Thank you, Brandon. Exciting times, sir.
It is. There's been a lot of anticipation for this, both from investors, but especially from your team as well. This is several years in the making. So I've just got a very simple question that I'm sure a lot of investors are asking, but you are, or I am of you as well. What are your thoughts on this independent PEA now that it's officially been released by SLR?
Well, it's an independent confirmation of what we've believed over the last couple of years. I mean, when we got involved in this project, we tried to kill it, right? Try to find that fatal flaw, and we couldn't do it. So that gave us the encouragement to spend more money and do the work to move it through the feasibility process. And we're at a threshold event today with this PEA, and it's quite satisfying to have that report, which again validates and confirms what we have been saying over the last couple of years.
Yeah, absolutely. And in talking about that and diving into that, I'd like to first begin with some of the key elements of this PEA, because it does say a lot to shareholders but also the implications for your company as well. I'd like to start off with the pre-tax internal rate of return and the net present value calculated by SLR. How does this outline the potential value for the Great Atlantic salt deposit?
Well, part of the PEA analysis is a cash flow valuation, which is a standard metric in the mining industry and other industries as well that have any future cash flow. And it's a means of comparing projects. We've got a net present value of $909 million, which we're quite happy with, given that this is a base case scenario. Now, that's valued at a particular discount rate or interest rate of 8%, which is a standard metric, again, in the industry for comparing projects, and a very strong internal rate of return of 22%. Now, that's based on what we feel is a relatively conservative base case, which assumes only 2.5 million tons per year of production. Now, we have the capacity, the mine and processing infrastructure investment capitalized in this cash flow analysis. So we've costed out the amount necessary to build the infrastructure so we can bump this production up to 4 million tons per year. That would have a very, very significant on its net present value and even make the project more valuable in terms of its target for future partnerships, investments, or potential suitors.
Yeah, exciting and fantastic to hear. I know, obviously, up until now, there's been a lot of investors trying to guess these items. There's been a lot of work going on. It's so nice to actually have these numbers to be able to work off. And you're talking about value. One thing that goes into value is obviously being able to have something for a low cost and selling it for a higher cost. Roland and yourself have talked about Great Atlantic having the capability of being one of the lowest cost producers in all of North America. Does this PEA align with that claim?
Oh, very much so. This mine will be a low-cost producer. I don't think there's any doubt about that. Based on our Q4 2022 pricing, we estimate a cost of $23.81 a ton to mine this material, bring it to surface, and load it aboard of a ship, what we call FOB, at the port there at Turf Point. So that is a very, very competitive cost. Obviously, that's the cost today if we were producing today. Obviously, we're a few years away from getting into production. That cost will escalate with inflation, but every other producing mine's cost will also escalate with inflation. Given the fact that we're going to be a state-of-the-art salt factory, We've also costed electrifying this mine. So the plan is to use electricity in every available area, and that will be the vast majority of the energy used. So that comes at an additional cost, which we built into the capital cost of the project. But let's not forget, we're building a mine for the 21st century. This is not a 10-year venture, 20 or 30. These mines can go on for well over 50 years.
Yeah, fantastic to hear and exciting to find out this information and more to come as well. Well, the PEA has also updated and upgraded your mineral resource as well. Can you explain the significance behind that?
Well, Brandon, not that we need any more tons, but we have more, and that's encouraging. What our additional drilling has done, of course, in addition to providing geotechnical information that will go into mine design, we've actually upgraded the inferred resource into an indicated category. We've got 187 million tons currently in indicated. That's important because you need to upgrade your resource to put it in the prospects of being mineable. And of course, that does not include our last hole, which was CC9, which was east of the big hole in CC4. In CC9, we cut a gross interval of 330 meters of salt. So that's going to help upgrade even more resources from the inferred to the indicated category. And it's just a step along the way, again, of de-risking the project.
Yeah, I appreciate you going into that detail there about CC9 as well, because I'm sure some investors will be curious about that line in your news release. Now, something that they're also going to be curious about as well, and there's been a lot of talk about this, has this PEA now confirmed your ability to have a declined ramp access for Great Atlantic?
Yeah, the PEA is based on the assumption that we're going to get there with 2 declines, because the deposit is so shallow. I mean, the top of our deposit is about 200 meters deep. Industry standards, that's extremely shallow. So, the engineers haven't seen anything thus far that would deter them from pursuing a decline access for the mine. It seems to be quite viable. And again, that's a very positive thing for the project, because what that means, it provides us with easy scalability in terms of our production rates, and there's certain economic efficiencies that come with that as well. So that's a very key factor.
Yeah, well, we've spoken about many key factors throughout our interview today, and we've talked about a lot of these key elements from this news release. But Patrick, to sum it all up, what does this PEA mean for Atlas Salt?
Well, I'll tell you what it means for management is that we've had this muzzle removed from our face, because up until now, we have not had the ability to talk about numbers in respect to the project. And I mean, it's very difficult to have meaningful conversations without being able to put numbers on capital costs, operating costs, pricing for salt, rates of return. So now we can do that. And that's extremely important, because it's going to give us such freedom to extend this story into a new audience and extend it deeper into the existing audience, because we've been approached by numerous investors. We've had discussions with potential suitors, and now we can actually talk about numbers and pull up our sleeves and get down to some real serious strategies about the future of this project.
Yeah, incredibly exciting to hear, and I'm sure many investors are excited to hear about the future of this project. Patrick, thank you so much for your time. Always a pleasure, and look forward to being able to speak to you again soon, because that means we've got more information to share with investors. Thank you so much.
Look forward to it. Thank you.